So this what we call SNRC1 setup. So usually this is where you enter your trade. You just don't enter your trade anywhere. So this is where you enter your trade right here. This is where you enter your trade. That's where you're supposed to enter your trade. So when it retraces back to this point, this is where you're supposed to enter your sell trade. And again, you don't just enter like that. That's why you're supposed to use divergence. That's why I say usually my strategy is just simple. If you understand SNRC1 and SNRC2, you can just combine it with divergence and then you get good setups. So, and SNRC2, this is how SNRC2 looks like. So if you have a downtrend, so if you have a downtrend, let me say I'm having a downtrend. Okay, let me say I have a downtrend. The market's just going down, goes back, then it goes down, and it comes back up to this point. This is SNRC2. So SNRC2, this is where you're supposed to enter your sell trade right here. Again, you don't just enter blindly, you have to use divergence. And divergence mostly, I use stochastic oscillator for confirmation. So if you have a setup like this and we have divergence, this is a good setup and it has a high win rate. So it depends on how you are using it. So if you have a setup like this or a setup like this and we have divergence, again, you don't just use this one like you go ahead and you see something like this, you are like, oh, let me enter sell right here. No, you must have divergence. Sometimes it might be here, might be right here, but we don't have divergence. On stochastic oscillator, it's not on overbought. So you have to wait for it to be on overbought. Maybe it will have to move up to around that point, or it will move up to this point. So you have to wait for a good divergence before you enter. So I'll show you on the graph all that. So what I'm trying to say, my analysis is just simple. Just use SNRC1, SNRC2, and divergence. And if you are, these are SNRC1 and SNRC2 looks like. This one is SNRC1, this one is SNRC2. So once you understand these two, it will be easier for you to trade, and it will be easier for you. You're on my channel. It will be easier for you to understand my setups. They are just simple. So let's just look at the graph now. So last week on gold, I think during news our setup failed. So this is the reason why it failed. And I remember I shared a setup. I think on Wednesday, I don't know, was it on Wednesday or Tuesday? So this setup right here, this is gold. So last week, I remember I shared something like, I was like, gold was going to react at this point. Yeah, gold was going to react at that point, of which it reacted the first point, the first run. It made a profit, then it went back after news. I thought it's going to retrace for the second time. It's going to retest for the second time. So after news, it broke this zone, and that's why we lost our money. It broke everything. It went all the way up to this point. And I remember last week, if you look at the charts, I had shared this zone. I said that market might come up to this point. I just shared, I marked the zones, then I sent it to the group. So at first, before you entry at this point, and at this point, again, I shared another setup at this point right here. I just want to show you the setups which I shared on the channel. There's this setup I shared. I shared this setup. I'm trying to look for the setups which I shared on the channel. So I shared this one. So it was a pie setup. Gold came to this point and then it fly. Then I shared another setup. So the reason why I'm showing you this, I want to show you why the reason why I shared the setup and how I looked at it. So this was the setup I shared, and then I shared this one. So this setup failed. So last week we had only one setup which failed. So okay, I'm going to add stochastic oscillator because that's what we are going to use to. So these two. So you can see at this point right here, you can see at this point, we have you look at this point right here. Let me draw it so that you can be able to see. If you look at this point right here, then you look at this point, and you look at this point, then I'll take 5-minute time frame. So let's just look at these zones. You can see this one, it's on the same level, it's on overbought, and this one is oversold, and this one is oversold, but this one is on higher, it's higher low. So this one is higher low, but it's on the same level with this one. So these are a divergence, but it's a high risk. It's a high risk divergence, but at the same time, we had a setup on 15-minute time frame. So in 15-minute time frame, you can see we have SNRC2 setup. Remember SNRC2, the one I showed you on the other side. You put a line chart. These are strong resistance. So this one happened to go up, happened to break it, go up, then come to this zone. This is where you end up buy. That's why I shared this setup here. I said we buy at this point and then the market fly. So that's how easy you're supposed to look at the chart. So the first thing you're supposed to do, don't complicate anything when you open your chart. The first thing you're supposed to do, go to a higher time frame, daily, weekly, 4-hour time frame. You see the trend of the market. You see where the market is going. So when you understand where the market is going, now we are going to use divergence. So we are going to look for SNRC2 setup, because if you understand where the trend is going, we just be looking for SNRC2 or SNRC1 setups. So once you get that setup, you look for divergence for confirmation and then you enter. So for instance, this one right here, you can see this market, it's a downtrend, right? So we had a downtrend. This gold, this 4-hour time frame. So if I go to one hour time frame, I know it's a downtrend. I'm going to look for opportunities to sell. So at this point right here, I have a supply zone at that point. So I'm going to look for this opportunity because we have SNRC1 setup. If I put a line chart, you can see this one, this as support. It came, it retested at this point. So the second retest at this point. So this is where I'm going to sell. So if you want to have it clear, we want it to be clear, you can take 30-minute time frame. So 30-minute time frame, it will give you a clear setup. So this one SNRC. This is SNRC1 setup. So you can just take your sell trade from this point. Then that's why the market is going to drop. Again, you just don't enter market just like that. You must have divergence. Divergence is the confirmation. So even if you get as SNRC2 setup, you must have divergence for you to enter. So like this one right here. So you mark that point and then you go to a lower time frame, you see we have divergence. So we have that one. Then you mark this point, see this is the lowest, so we have this point right here. So you can see this point we have lower low, and then this one we having higher high. So these are divergence. So if you take that divergence, these are continuations. So you can take your sell trade right here. And then mostly people ask me, where do I have to take my profit? Because usually I don't share take profit. So when I usually send a signal, when the market moves around 50 pips or 30 pips, you are supposed to close some trades, then you break even. You just close some trades, you break even. Mostly take your profit right here, the previous low. That's why you're supposed to take your profit. But when the market moves, when it makes some moves around 30 pips or 50 pips, you just break even. Because from up here, up to down here, these are around 400 pips. So it has moved more around 400 pips. So if it moves just around 50 pips, you can break even and leave the market to run until it's on the previous low. So that's how that's how my setups usually work. So when I send a setup, just break even when it moves. When we are in profit around 50 pips, just break even. And when you break even, they take profit. You are going now when you are going to maybe you want to close some of your trades, just close them at the previous low or previous high. If I enter, if I send the trade here, if this was our entry, this way you take your profit. The first profit, this way you will take it. This way you'll take your second profit. And this way you'll take your final profit. So that's how you layer them. So you take the first profit at this zone, second profit at this zone, this is the final profit. But mostly what I do, I just, once it moves around 50 pips, I close some trades, then I break even. So the moment I break even, I'll just let it to run the previous low or previous high. That's what I usually do. How do you break even? This is my second week trading. So break even, it means if your stop loss was up here, let me say your stop loss was up here, and your entry was at this point. So again, another thing, when I send a signal, like let me say last week when I sent, I think I had sent this signal. So when I send a signal like this one, I usually mark this way, and I say maybe 30 pips above the zone. This is what I mean. When I say 30 pips above the zone, from here, you have to count 30 pips. This is how you can count 30 pips. You just mark 30 pips above this zone. So you just mark 30 pips. This is around 40. So you mark around 30 pips above the zone. This is around at this point. This is where you just put your stop loss. Right here, this is where you put your stop loss. So once you put your stop loss, that's it. So when the market has moved around around 50 pips, when the market has started moving from here now, it has moved around 50 pips. Let's say it has moved up to this point. I'm just taking this one point as an example. When the market has moved around up to around this point, you just move your stop loss from the one that was up here. You just move it down here. That's break even. That's what we call break even. So when the market moves around 50 pips, you move your stop loss above your entry point. So that's what we call break-even. So again, don't complicate these things. And if you don't understand what you are doing, don't use your win money, just use a demo account. Try to understand what you are doing before you start risking your money. So again, I try to make it seem as simple as possible. So currently, where we are having gold and what's going to happen this week, that's what we are supposed to do now. We're supposed to do the analysis. So this week, if we start from a higher time frame, you can see it's like gold is trying to make a downtrend. See, it's trying to break. If I draw a trend line, there's a breakout and there was a retest. So you see breakout, retest, and right here where we have this supply zone, it has already retested. So it has the second retest. Breakout, retest, dropped to the previous low, retested back. So it's like it's going to continue dropping down. So my zones of interest, I'm going to mark this zone because it has not touched this zone yet. And then I'm going to mark this zone. So if it continues breaking these zones, it will continue going down. That's what we should know. So if it continues breaking these zones, it will continue going down. But on today, when the market opens, this is what I'm expecting gold to do. It depends again on how the market moves. So this 4-hour time frame, I've already identified. You can use EMA 50 again to know. Instead of, if you don't know how to draw a trend line, just use moving average, EMA, exponential moving average 50. So you just go to exponential moving average, 50, then you set it. It will just show you the trend line, like where the trend is moving. So if it's above the price, it means it's a downtrend. If it's below, it's an uptrend. So that's what you're supposed to do. So right now, you can see the market has already bounced from EMA 50. So this on 4-hour time frame is showing it's a downtrend. So what am I expecting this week? So I'm expecting gold on Monday, it's going to react from this zone. This is the first zone. This is my first zone of interest. So today, when the market opens, this is the first zone of interest. If it breaks this zone, then this is the zone I'm going to look at. Okay. This is the zone I'm going to look at. So if it breaks this zone, but this is the zone, this is the first zone. The second zone is this one. So if it breaks this zone, I'm going to look at from this zone. So, and then the moment it starts moving, I'm going to target it. I already marked down there where I'm going to target this market. So the moment it starts moving, we have this order block right here. Remember, we have a fair value gap here. This is a fair value gap. Then we have this order block. So this is where the market is going to drop to. So I'm expecting it to drop up to this point. So again, I'll not just make that decision just like that. I have to use SNRC2 and SNRC1 setter, maybe SNRC2 or SNRC1. So this is drop phase drop. This is a supply zone. So I'm going to go to 15-minute time frame to see what I'm having here. So I want you to see something. Right here, you can see the market is dropping. But on stochastic oscillator, the market, it's already on overbought. You see that? So this divergence, it's already the market is telling me that it's going to drop. First, we have identified that we have a downtrend, and here it has already shown me we have divergence. So there's a likelihood that this market is going to drop, and here we are on overbought. So this market is going to drop. And whoever was where I'm going to take the profit, this is where you'll take your first profit down here on a previous low. Always just take your profit or close some trades, or maybe 3/4 of your trades on the previous low, then break even, leave just the rest to that. Because remember, you are trading following the trend. We are not trading on reversals, we are just trading following the trend. That's why I'm using divergence. And I'm not using classic. We have two types of divergence. We have classic divergence. Classic divergence, it's used in reversals, like this one now here. This one right here, these are classic divergence. Classic divergence, it's used in reversals. So I'm not trading on reversals, I'm just trading on trend continuation. I use hidden divergence. Hidden divergence is used in trend continuations. And always when you trade following that trend, you are likely to make more profit because you are just following the market where it's moving. So here we're having hidden divergence. I'm expecting the market to continue dropping. Maybe it will drop, then retrace back, but I'm expecting it to, these two zones, these two zones are marked on H1. These two zones, this zone right here, of which already the market has the market has made a weak rejection from it. So if the market opens and it comes back here, maybe it will form a form of reversal before it drops here, or it will break this zone, then it will start coming from down up here. But there's a likelihood that it's going to drop from this zone. So this is where we are going to watch on Monday. When the market opens, I will not send a signal immediately when the market opens. I'll just let it run, maybe during London session or US session. That's when we'll be able to get a clear map where the market's moving. Because we might say it's dropping, then it just goes back up there. You see, because here, if I go to 5-minute time frame, I can see I'm having classic divergence here. So classic divergence, it might mean reversal. You see, we have a classic divergence. So it might first go back to this zone before it continues dropping. Again, we have to wait for a confirmation. We just don't enter a trade. Once you see divergence, you just don't go in for a trade. No, we don't trade like that. You just have, you must have a confidence, must have a confirmation. You know what, you know the reason why you go into a market. Don't just dump your money there. Have a reason. Even if you lose, you know that I lost because of this, and this, and this. You don't just lose your money, then you are like, oh, Forex, I don't know, Forex, I don't. So first understand why the market's moving, where the market's moving to. Even if you lose, you know that, oh, this is the mistake I made. All I made, I used a tight stop loss, or I did this and this and this. So first understand the market before you do anything. If you don't understand, just use demo. Use demo account until you understand. Don't open a trade. There's some people who send me some, who send some screenshot. You send me a screenshot that when I send a signal already, sometimes you find the market, okay, sometimes you find the market is here, and then I mark this zone. The market has not reached this zone yet. The market has not reached this zone yet. I just mark this zone, then I say sell limit. When I send sell limit, already the market is here, somebody sells at this point. You see, they are going to be on a floating loss. Maybe they'll pull out the account before the market comes up here. So you find somebody selling at this point, again, it continues selling until it comes up to here. Then they are on a floating loss. Maybe you find they're having a small account, then they will close their account. So usually when I say sell limit, I mean you put pending orders. You just put a pending order. And when you are layering, don't layer starting with a big lot. No, use a small lot. Start with 0.01, 0.02, 0.03, for 0.04 until 0.05. Don't just start with a 0.05, then you just layer in an inverse form. No, just start with a small lot. You continue to layer. If the market touches this point, then continues going in, you find that it's just activating the bigger trades. Don't just start with that big trade right here. You'll blow your account. Okay. So the easiest way to trade, it's good we use a sell limit and buy limit. We wait for the market to come to the zone. We don't just the market. We just let the market come to us. Okay. You just do your analysis and wait. I think that's what you usually do on the book. I just send limit orders on. I don't. It's rare. Maybe when the market comes to this zone, that's when I'll say sell now. But usually I just say sell limit. So the moment the market comes to the zone, it activates the zone. If it drops, or if it does not drop, it goes up. So you guys remember, sometimes we do lose. So when I say sell limit, does not mean that it's going to react 100%. Sometimes it can lose. So that's what I'm expecting on Monday. On this call, that's what I'm expecting. So I see most of you are new in trading. Can $100 account trade on gold? Yeah, $100 account is okay, but you use the lot 0.01. Break even is all about changing the stop loss. Yeah, you move the stop loss above the entry point. What's the time frame to confirm divergence? Use a lower time frame to confirm divergence. If you did your analysis, this is what I mean. If you did your analysis and 4-hour time frame, try to use 30-minute time frame, 1-hour time frame, or 15-minute time frame to get a divergence. But don't go all to 5-minute time. Don't use 5-minute time frame. Just 15-minute time is the minimum you can use if you did your analysis in 4-hour time frame. So a stop loss. Okay, let me use a different pair, the one that I have not marked. Okay, let me say, okay, for instance, this USD, GBP USD. I send a signal like, let's sell at this point. I say sell limit this point. Then the market comes to this zone. When you put your stop loss, you start counting your pips from this point. 30 or 40 pips above the zone. You just mark 40 pips above the zone. So like this one, 30 pips, it's around here. This way you put your stop loss. So it's almost above the previous low. This way you put your stop loss. Okay, you see where I mark this one, this way you put your stop loss. You don't put your stop loss right here. If you do that, these are tight stop loss and you'll be stopped out. Sometimes the market can come all the way in here, then you will be stopped out. So this way you put your stop loss. Just count 30 pips. 30 to 40 pips, it's okay. So again, if that's a okay, if it's 1 hour time frame, like this one, maybe on Monday, again, this GBP USD. So GBP USD, if whatever happens, so maybe the market, if the market drops, I'm not saying that it's going to drop this point, but if it drops to this zone right here, if it drops to this zone, and then maybe if I send a signal, I say buy limit. So the market's going to drop. Let's say the market's going to drop. This way you put your stop loss. 30 pips below this one. You start counting from here. 30 pips. This is 17 pips. So around, you put your stop loss around this point. This way you'll put your stop loss. So again, when you are trading, just be careful on what you are doing. So mostly because this market can drop and come and sweep from this zone before it continues going up. So if you put your stop loss right here, it will just it will just stop you out. So just use usually I use 30 pips. So 30 pips is the stop loss I use. So this one right here, you can use this one. If you have a desktop, you can use this one. If you have a laptop, whichever way you count your pips, make sure it's around 30 pips. That's why I usually send 30 pips below the zone. So make sure it's 30 pips below the zone. So again, when you are trading, try to use divergence and SNRC1, SNRC2. So let's continue discussing on SNRC1 and divergence. I'll just discuss SNRC1 and divergence. So like this one, this is a GBP JPY, GBP USD. So the market, you can see the market, it's not yet overbought. And we don't have divergence here yet. But you can see the market has reacted from this zone. It has reacted from this zone. And when I go to a higher time frame, which is on a daily time frame, I can see the moving average EMA 50, it's below the market. So it shows me that it is an uptrend. So I'll go to 4-hour time frame. I'll go back to 4-hour time frame. I'll try to look for divergence. So if the market, this one, I could have gotten this divergence right here. And you can see we have SNRC1 set. You can see this SNRC1 setup, the first retest, second retest. So SNRC1 setup. So I'll look for divergence. Do we have divergence? So I'll just look for this one. And then we have this one. So then again, can take this one too. So you can see these are clear divergence. So you enter your buy at this point because we have SNRC1 and then we have divergence. This way you can enter your buy. And remember from a daily time frame, we saw we have an uptrend. And you can see the moving average, EMA 50 is below the price. So you just enter your trade, you enter your buy at this point, and this way you'll target. This way you'll target your TP, but when it comes to this zone, right here, we call it a roadblock. You can close your partial because this is a roadblock. So that's what usually happens. If you entered here, you can just break even at this point of which it would have dropped and then close your stop you out. But you can see this is a roadblock. So again, you have seen on how you can use SNRC1 and divergence. I can use a different pair. GBP JPY. Let's see what we have on GBP JPY. Take this one out. I'm going to start with daily. Daily, the EMA 50 is below the price. That's an uptrend. So I'm expecting to get SNRC1 setup or SNRC2 and divergence in H4. So let's see H4 what we are having here. So you can see at this point, and then you can see this. These are clear divergence. We have lower high and then lower lower. So these are clear divergence. We call it hidden divergence. So when the market is coming here, you just enter buy. And you don't just enter buy when it's this one must be or it must be oversold for you to have that divergence. So if you find something like this right here, you cannot take this one like this one is divergence. No, don't take this one. This one, you lose your money. So just wait until the market comes to the oversold and you have your clear divergence, and this one is right here. You have already known where the market is moving to. You enter your buy at this point, then this way you take your profit. That will be your take profit. So that's how simple it is. We can just take any pair. So it's like at this point right here, at this point right here, and this point, and this point right here. So already we know it's an uptrend. So you can see this is hidden divergence. You see what happened with the market? Just went all the way up. Hidden divergence. We can use another pair. So we can select another pair. Let's use maybe any pair you can select. GBP card. So on GBP card, so on daily time frame, it's trying to show us the price below, the price is above the EMA 50. So H4, I'm expecting to get divergence. If I don't have divergence, I'll not enter that trade. So here you can see what we are having. At this point here, and then I can mark this one. So already you know what we are expecting next week. So these are high, lower high, and then this one we have lower low. So these are hidden divergence. So what am I expecting next week? This market to react from this zone. So because already I know on H4 we have an uptrend. On daily I'm having an uptrend. So H4, this is what I'm expecting. So until moves all the way up here, so that's when I'll take my profit. So this way I'll target it. Just target it up there. Though we have this roadblock right here. This is a roadblock. So, but this way I'm targeting. Just as simple as that. You don't need to complicate it. Just make it simple. And you just move with divergence. You must have SNRC1, SNRC2 setup. So for you to have that confirmation. Okay. So this one right here, if I can narrow it out. So yeah, this one right here. Then I'll put a line chart. These are strong support. These are strong resistance. It break out, retest here, and then just came for the second retest. So this is why you buy. So you see if you are timed this market, the moment it came to this zone right here, you could have bought right here. Then you see what happened. The market went up very fast. So that's how you trade using SNRC1 and divergence. Maybe you have which market is this CLM? What's the reward score do you use? Risk reward ratio. Usually it's 1 to 3. Yeah, it's 1 to 3. Check Euro USD. So somebody asked about Euro USD. So let's look at Euro USD. So let's start H4 time frame. Let's see what we are having here. On H4 time frame, We have daily. So you can see the market is reacting from EMA 50 on daily time frame. And H4, you can see we had SNRC set up right here. This is resistance. This a rally phase, rally zone, and then it has retested here. So the market fly, and if you can look, if we have divergence, here we have divergence. You can see it from this point, and then this point right here. These are clear hidden divergence. So the market is moving up, right, from this point. So if it has already moved up, that's for our time frame. So where am I going to, which time frame am I going to target it again? Now I'm going to target it at H1. So in H1, I'll be waiting for divergence, and the market I'll be timing at this point. So I'm expecting if this market drops up to this point, and this one will be oversold, and then it makes a good divergence in maybe M30. It makes a good divergence in M30 here, and this one can go up here, then it will drop. So if it makes a good divergence, I'll just enter my buy here. Again, I'll just have to wait. So these are the nearest man zone. So I'll have to wait for this market to drop. Remember, already we have a break of structure. So we have a break of structure. So this way you can combine everything. Already we have a break of structure, so it's going to retrace back. So the nearest man zone after, we call it, or some people call it order flow. So after fair value gap, it's just right here. It's just right here. So I'm expecting this market, if it drops, it will just drop out to this point, and then I'll be having divergence. So the moment I have divergence, I'll just go in for a buy at this point. Again, it might break this zone and come all the way to this zone down here. Comes to this zone. But again, this is the zone I'll look at, and this is the zone I'll look at. This week, when the market opens, this is the zone I'll look at first. Again, the reason why I'm just going to focus on buying, on daily, you can see the market has just reacted from EMA 50. And you can realize one thing. When the market bounces at EMA 50, you see what happened. It moved down. When it bounces at EMA 50, it just goes up. So EMA 50, it acts as a strong support and resistance. So sometimes it's a support, sometimes it's a resistance. Like at this point, it's a strong resistance. Resistance, it acts as a support. It acts as a support. So here you can put a line chart. Again, you can put a line chart, then you draw your trend line. So this is a combination of everything you can do. But to avoid all this, just use SNRC2 and divergence. It will be easier. So already we know on daily, this is what we have. H4, it has already reacted from this zone using divergence. So I'm not going to look at H4 now. I'll look at H1. I'm going to wait for divergence in H1 before I enter my trade. Yeah, another question. How do you calculate the reward ratio? For everyone you risk, you are waiting for. Okay, maybe if you are risking your 20, you are targeting a profit of 60. That's what I mean. I mean, that's the easiest explanation I can put out there. How can I auto trade? How can I auto trade, and what are the benefits? Auto trading is when you are using an EA to trade. I don't know the benefits about that, but it depends which EA you are using. Can I copy trade you? No, I'm not offering any copy trade, and I'm not trading for anyone. So I don't go. I'm not trade. I'm not doing account management, and I'm not trading for anyone. I just share the signals. That's it. Hello, kindly take us through the basics. Before buying, should we wait it to retest? So when it's in the zone where I share, when it reaches the zone, just you can layer in that zone, because usually those zones which I share, when the market touches right there, if you are in my channel, you can, I think you have seen that when it just touches the zone, it moves away very fast. So, but if you want, if you want, you can go to 5-minute time frame or 15-minute time frame to look for candle engulfing, like confirmation for you to enter. So it depends on how to look at it. How do we know the amount of pips to use? How do we know the amount of pips to use? You can use you can use trading view. Trading view can show you the amount of pips actually. So using trading view, you can be able to count the number of pips. It can help you to count the number of pips. Check hold. I already did I did my best analysis on gold. So that's what I'm expecting. The one I shared, this is what I'm expecting. I said this zone here, this is the zone of interest, and this is the zone of interest. And the general trend, I said the market has already changed the trend. Right now it's moving sideways. If you have realized that, guys. So usually gold moves in three forms. So this one is moving sideways. So you see, if it breaks this zone right here, down, just go down. So if it breaks this zone up here, then it just shoots up. But I'm just expecting it to go down. So because it's a downtrend, so move down, sideways, down. So let's just wait and see what will happen. So for gold, I already shared it out, and I said we already have divergence. Actually, in gold, we have a clear divergence. So we have this divergence right here. So we just wait. Give the market opens. You can layer. What does that mean? Layering, it means that when I share, like when I say sell limit at this point, this is what I mean. When the market comes at this point right here, this one you see it just touched the zone, then it dropped. But when it comes to this zone, layering, I mean, you can open a 0.1 a lot. If you have a $100, I think I sent that in my in the channel. How much you're supposed to risk when you have $50 and $100. So 500, $1,000, whatever you have. So this is how you are supposed to layer it. Like here, you're supposed to start with 0.01. Let me say you have a $100 account. 0.01. If you want to use high risk, you can just add another 0.01, or you can use 0.02, 0.03, 0.04. That's it. That's layering. But you don't open all trades just like at this point. No. That's how that's what we call layering. You just open a trade after a certain distance, pip distance, maybe after 20 pips or 30 pips. It depends on all 10 pips. It depends on how you are doing that. Do you use Fibonacci? Yeah, I do use Fibonacci retracement, but yeah, I have different settings on that. So I can use Fibonacci retracement. It gives you the zone. It gives you the zone of interest. Okay, let me show you. Like this one right here, I can say if Friday I was, because after news I didn't trade. So if I wanted to trade, this is what I could have done. I could have used Fibonacci retracement. I'll just open this one right here. Then I look for the breakout. So this one right here, this is candle engulfing. This is where we have the breakout. So this candle right here, we have the breakout. Then this is the candle that is causing the breakout, this candle right here. So I just put at the break of that candle, at the closing of that candle right here. That's why I put my 100 level. Then I'll just start marking the zones of interest. 261, this is the zone of interest. This way I could have expected the market to drop. So the second zone of interest, it's here. That's when I'm using Fibonacci retracement. So the third zone of interest, it will be up here if the market continues going up. But now it already dropped from this zone. So next I'm going to use, still I can use Fibonacci retracement to see where the market is going to drop from. So I'm going to use this zone right here. Candle engulfing, it's at that point. So the breakout we have, this is the candle that is causing the breakout because we have this support right here. This is the candle that is causing the breakout. So I'll use this one right here. So this one we have candle engulfing. This is candle engulfing. Then we have a support right here. This is the support. The candle that is breaking out that support is right here. So that's how you use with these settings I'm using. That's how you use this one. So you mark the zones of interest. So this is the zone of interest. I'm expecting gold to come to this zone. And then this is another zone of interest. So that's how you use Fibonacci's. But this one, if you realize, it's having different settings. So, but this is how you use Fibonacci. So these are the zones. And remember, I already told you this way I'm expecting the market to drop. I already told you guys this way I was expecting this market to drop to this zone right here. So you see, Fibonacci is showing that zone. So that's how you use Fibonacci retracement. But I'll show you later. Right now, I'm just focusing on divergence and SNRC. SNRC1, I mean. So, but still, you can use Fibonacci to give you you can use Fibonacci retracement to give you the zone. Still, I can use it right here. So at this point right here, I can go ahead and mark this one. Candle engulfing is right here. Then support, this is the nearest support. Breakout, it's at that point. So this way the market, I can expect it to move to. So it can go up here, right, or right here. So we have to wait for this market to give a clear confirmation. You can see on 30-minute time frame, you see 30 minutes already, this one it's not up here yet. So for it to go to that zone, this one might come up here for this one up here.
Okay.
Yes, guys, I think, guys, that's the easiest way to trade, but use divergence. You can use Fibonacci. Fibonacci, it's easier for you, but I think that's one of, well, I'm a few that you help us to more and tell us where exactly to add another position. Most layers are smart. How do you set Fibonacci retracement? I'll show you, I'll send the settings to the group. It's a PDF. Some of us it's possible for you to demonstrate on a demo account. What do you mean? Red night, maybe you can ask I don't understand what you mean. How long have you been, it has been 3 years now, 3 to 4 years. Yeah. Around 2 years of struggle. And 4 years of struggle, 2 years of struggle. Yeah, that's it, guys. So Monday, when the market opens, this is what we are expecting. So when Fibonacci gives you a zone like this, you don't just mark this like the way I've marked here. So I'm just going to mark the whole supply zone from here. This is the nearest supply we are having, so we mark it that way. Yeah. So that's how we mark this zone. Yeah, guys, I think if you have any question, you can just go ahead and ask. Again, I have the PDF is on the channel about divergence. So when you get supply and demand, SNRC is all about supply, demand, support, resistance. So guys, if you have any question, you can just go ahead and ask. So when I'm sending the signal on the group, just know that it's based on divergence and SNRC1 or SNRC2. And if you have any question, when I send the signal, just ask. Yeah, you know my tag, so you can just go ahead and ask. So that's the easiest way we can do it. And on Wednesday or on Sunday, we do the same thing. Slowly we can learn to get, and this will get something. Another question, maybe. If you have videos, please share. It's on the channel. Please, can you share some slides or send SNRC setups to learn? SNRC. I'll share more. I'll share more PDFs in the channel. Is this divergence similar to trendline trading? No, it's not the same. A trendline gives you the direction of the trading. Divergence is different. What's the difference between fair value gap and change of character? I don't understand. Okay. Pascal, you're asking about change of character and divergence. Okay. Let me show you. Let me use this one. Okay. Can you be able to see my screen? The paint screen.
Yes.
Okay. So change of character, this is what I mean. Let's say the market's moving up. I'm sorry. Okay. Let's say the market's just going up. Assume these candles are just filled. So we have another candle. And then we have another candle. So these are 3 candles that are going up. So then we have some wicks. So just assume we have some wicks right here. We have this wick. We have a wick. I'm not good in using this paint, so we have a wick. We have a wick. And then we have a wick. So this is the market, okay? It's moving up. So, I'm sorry? Okay. So we have this week. So this is what usually happens. When we have something like this, a fair value gap, this is the fair value gap. You see right here? This is what we call a fair value gap. Between this week and this week, when we have a bullish movement, okay? That's a fair value gap. So this is a fair value gap. Are you together? And change of character, it's when you see we're having a downtrend. The market's just making a downtrend, okay? So this one, we call it break of structure. This is a break of structure, break of structure, break of structure. So instead of it going up, going down, it just changes the direction. It starts moving up. So once it does something like that, this one we call it change of character. Change of character is it just shows you that the trend is changing. So this one is break of structure. We call it pause, break of structure. This one is the one you wrote on the chart. This one is change of character. So it shows that the direction, they changing the direction of the trend, because it breaks the higher low, and then it forms higher high. Okay, so that's what we call change of character. But this one we call it break of structure. And not, please don't. I see it's like you are trying to use the pen. So that's the difference. So this break of structure, break of structure, break of structure, change of character. I think I've answered your question. We really appreciate this post, but you need to focus more on us or smaller accounts, because we need to know when and where to add a position. Okay, I'll do that. I'm unable to trade because I linked my XM account 25 and I'm able to log in because it says authorization failed. So the reason why it says that there is the server, you are using a different server. obvious, it sends a different server. So you have to look at the server they sent you. Sometimes it will be 9, 10, 5. So it depends. So you are going to look at the server and then you add that server there. You use your logins, you put your server, then it will be able to log in. If it fails, you can just text me. I will be able to guide you. Okay, guys, I think that's it. So
Okay.
if we are going to trade together, let me just tell you something. If we are going to trade together, try to do this. If you are going to follow the strategy, then be following what I'm posting in the group. I mean, just look at the chart. If you have a question, just ask. Concept, this is the easiest strategy to trade. Just look at SNRC1 and divergence. That's it. But if you try, every strategy works. Every strategy works. So if you try to use a different strategy, you can use SMC. If you want to use SMC, you can use SMC. If you want to use ICT, you can use ICT. Every strategy works, depending on who is using it. So if you decide to use a different strategy, focus on that strategy, but you cannot master all of them at once also when you're starting to trade. So just look for the one that suits you and try to perfect it. So if you are want to trade on divergence, use divergence. If you want to trade on SMC, use SMC. If you are going to, until you understand, then you start adding other things. So if you are going to trade on ICT, just look. So, okay.
Please,
Yeah.
can you say something about prop farms?
I'm sorry.
Can you say something about prop farms?
Yeah, prop farms. Okay. I don't know. Are you in the VIP group? I think I posted something like I said something about prop farms. So prop farms are good. Well, so if you have FTMO, and there's somebody who asked me a question about there's somebody who asked me a question about trading for somebody. The only thing I'll start doing is trading, passing your profile. So if you have a problem, I'll let you know when I'll start doing that, and I'll tell you specific programs I'll be able to pass for you. That I'll tell you when I'll start doing that. But programs are good. So FTMO, because MFF was closed, so you can use FTMO, you can use Funded Next. So it depends which one you are using. So again, don't get FTMO if you don't know how to trade, because you are doing nothing. Actually, you will lose it. So, but if you know how to trade, you can get a prop farm, and it will help you post your trading. It will help you with capital, I mean. Because I wish you could also provide a profitable stop loss instead of 30 pip stop loss. Oh, okay, sir. Okay, I'll start doing that. There's somebody who's using my. Okay, please don't be writing on. Yeah. I'll it's Funded Next a good point. Yeah, it's sure. It's a good one. I use FTMO, so. Yeah, another question. So we'll just meet the course of the week. We'll do analysis. We'll learn together. We'll see whatever we are doing here. Well, if I say divergence, you know now what I mean by divergence. If I say SNRC1, you know what I mean by SNRC1. Okay, guys, I think that's it for today. Do you have specific currencies to trade, or you trade all? So sometimes I trade, okay, mostly I'm trading now gold, but sometimes I trade on GBP USD, GBP JPY. I trade all kinds, but major pairs on. Okay, share the video on YouTube. We check. I was like, okay, sure, I'll do that. Okay, guys, I'll wish you a nice evening. Yeah, you can you can text me on Telegram. You can text on Telegram. I'll guide you through. Thank you, Brandon. Have a nice one. Guys, see you tomorrow. See you on the channel. I'd like to know kindly which is the best trading to trade from. Naftal, I don't understand your question. Which is the best trading to trade from, please? So I don't understand your question, Naftal. Okay, guys, have a nice one.